What's up, tubers? Ken here from the Dyslexic Investor, and we are going to be doing slightly a deep dive into EA here. EA, Electronic Arts, is the big game publisher within mobile. They do the EA Sports franchise. They have a huge lineup of Star Wars games. They have a huge lineup of the Battlefield franchise. And then recently they just released a battle royale known as Apex Legends, and they're currently in season 2 of that. It's kind of like a competitor between Fortnite. So we're going to dive into some of the fundamentals first on understanding on how things are working overall on sales, on graphs, on the understanding on the how many people are actually playing the games. Like, this is very important concept. So EA breaks it down in that different franchises. They have a huge sports franchise from FIFA to Madden. Like, they basically own those IPs, and that's a huge revenue stream for them. Another revenue stream that happened is the Battlefield franchise, which is like an FPS first-person shooter. That's the one that is recently released was Battlefield 5. It was a W2, World War II themed shooter, and then most recently, like I said, the Apex Legends is like a Fortnite competitor. You can kind of dive here back on the chart here. So if I just go to a weekly, just do an overview on a weekly. So around this time last year, I believe it was when Battlefield came out. Probably, I think it was around September. Probably September, October, I believe, and where they had issues with a little bit of the, I'm doing air quotes, like the pay to win, aka you need to buy these packs to unlock things, and they're having a huge issue with like the loot system within Battlefield, the loot system within Star Wars. It was just very tragic on Battlefront 2 and then Battlefield 5 that they had implemented these digital goods, and it really kind of broke the game. It really limited the user and to have a fun experience unless you had to pay. You already paid $60 for the game, and then you have to pay more to get the game to actually properly work and to do the things that you would expect it would do, minus having to pay substantial out-of-pocket cost. So you can kind of see here that on the chart that's highly represented, but then of course this is also the sellout that we had towards the end of 2018. Then you can kind of see here this nice little rebound here, technically, where Apex Legends came out, where they just kind of announced it the beginning of February, where they literally were touching the very bottom after the last earnings report, and it just kind of bounced up and kind of pushed them through the high of 2019 at like 108.92, and then ever since then we've been bouncing back and forth. And they recently just released season 2 for Apex Legends, which is saying that it's not as hyped up as season 1 or even the beginning of Apex, and people are seeing that there's a kind of change in the video game industry in the sense of these battle royale games, because the Fortnite has noticed certain lulls in their player rates. And how the people track this, they go to Twitch and they can see how many people are streaming it and how many people are actually viewing it, and they pull the stats from that. It's not always the most equal representative of how the game's doing, but it is a pretty good gauge on if you see Shroud playing Apex, like he gets 40-50k people watching him, or Dr. Disrespect, and of course you got Ninja doing Fortnite and Tim the Tatman doing Fortnite as well, and they're like those goes the guys that are the heavy hitters within the battle royale game. So whatever they're playing is kind of the trend. So yeah, that's the breakdown on EA. Technically on the chart, we can jump in, dive and look at more of a daily aspect of it. So you can kind of see here, literally, the Apex saved their booty, hitting almost the low of the previous year here at 78.07, and then a low of just the 73.91 here. You kind of see it's had a huge green bars, momentum going higher, and again, not being able to break above this level since then. So that's kind of a key point, and then making higher lows, higher lows, higher lows, higher lows, and then kind of petering off, getting a little bump up here from recently the Season 2, but with other games falling under, like Anthem, which was a lack of a better words, a disaster for them. They spent, I don't know how much money, I should put it on the screen here, on creating that game, and then it just kind of flopped. And I haven't read too much anything about the EA Access stuff on like this, like their subscription program that they have that kind of lets you play all the games within their library. So that being said, like my view on EA would be to let's draw a line right here. So this is, nope, that's not what I want. Move it slightly higher. So this would be the very tight range. I would even do, let's go to this chart here. I like this better. So these automatically draw these lines here. So this is a very tight range, and you can kind of see here it's consolidating between like the 90 and like the $100 level. I'm very concerned in the sense of, even though Apex is a fun, great game now, and I enjoy playing it, I haven't been playing any other of their games just because they're a little lackluster and it's kind of grindy. But this is very showing in the sense of it's gonna pop up or down, and most likely it's gonna have to be via their earnings. So that the earnings are coming up. It's not for sure yet, but they're saying 7/30/19. So basically the end of this month, or it could be the beginning of August. We could see their earnings report, and that could be a particular trades on depending on how this trades. Like this definitely could just trade between the 90 and 100 level until it hits the earnings. So the biggest competitor to them, and the best way to gauge them as well, is Activision Blizzard. You can see them as well having a huge dive off at the end of last year because the Federal Reserve issues of bonds and so forth, and then the overall, again, the whole sell-off as a whole, and their growth potential for a lot of these games were just lackluster. Like they had a couple flops, like World of Warcraft and and their Call of Duty series is kind of hitting a lull, and then they're not really coming out with bang busters. They had a pretty good Battle Royale series, but they for some reason couldn't keep it up, and like Apex came out and really kind of took its lunch. And again, like this is also trading in a very tight range. It's a slightly cheaper stock. So let's do, this is Activision Blizzard, so this is ATVI. Again, trading in between like the 50 and like the 40 level. A little bit more tighter would be like a 41 to like a 50 level. Again, very tight, concise movements. Last quarter didn't show well. The quarter previous to that, not so great as well. And the quarter, 3 quarters ago, was terrible, and the one prior to that was a little lackluster as well. So we can just look at this and then look at the EA. I think EA is also hugging. This is this white dots is the 200 simple moving average. So again, anything below this is considered like a value investing buy, saying it's undervalued and what the potential that it could be. Like EA is coming out with some fantastic looking games. There hasn't been a new announcement for the Battlefield. Battlefront 2 has been updated substantially. Apex they're pushing out updates, making it balanced, getting rid of cheaters, which is a huge issue with any free-to-play game. Is cheaters. But they're, from my understanding, is they're estimating 150 million in cosmetics, upgrades, season passes, buys within just the Apex. So that's be a nice little bump. Again, huge component. Waiting to see what happens for their earnings report. And again, the overall market, could drag this down. Like, we wake up tomorrow or next week and having issues with the China trade wars, or having issues regarding anything else going on in the world. The Federal Reserve saying that they're not going to cut rates. We could have a short-term sell-off, and usually the first ones that go are these technology-based companies that are supposed to be high growth, because both of these, I don't even think they have a dividend, but it's a little lackluster. They're both below the 200. They are not performing at the same level as like an Amazon or so forth is performing this year. They're actually down majority of the year, and again, being below the 200 is never a world's greatest sign, and it's a sign of a great achievement. Again, it could be a potential buy. Again, EA is a huge red flag. They didn't really announce too much at E3. Same with Activision Blizzard. They did release a pretty cool Call of Duty trailer with not many details. But I hope everyone enjoyed this. If you want me to do deep dives on industries and other stocks and so forth, please leave in the comments down below. Don't forget to hit the like if you want to support the channel. Again, this is Ken signing off from the Dyslexic Investor. You guys have a wonderful evening. Peace.